Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Intelligence with Scarlet and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlet and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
On today's Bloomberg Intelligence Show, we dig inside the big business stories impacting Wall Street and the global markets. Each and every week, we provide in-depth research and data on some of the 2,000 companies and 130 industries our analysts cover worldwide. Today, we'll look at why the Trump administration is warning about Tylenol use during pregnancy. Plus, we'll look at what's in store for the telecommunications company T-Mobile after naming a new CEO. But first, we begin in the antitrust space. We recently heard that the U.S. Federal Trade Commission and 7 states have sued Live Nation Entertainment and its Ticketmaster subsidiary. It's for failing to prevent the use of automated ticketing bots and large-scale resale operations. For more, co-host Scarlet and I were joined by Jennifer Rhee, Bloomberg Intelligence Senior Litigation Analyst. We first asked for Jen's first impressions on the latest news.
Well, I think, first of all, not too much of a surprise because they did recently sue a much smaller entity over the same law, which is called the Better Ticketing Online Sales Act, or the BOTS Act. And Live Nation was mentioned an awful lot in that lawsuit. So it sort of led to the conclusion that there might be another suit brought. And President Trump did order the Federal Trade Commission to better enforce this act back in an executive order in March. And they have a report due to the president on September 27th. So saying, what have they done to better enforce the act? So I think it's not a surprise that a big lawsuit came down before that report is due.
You know, you talked to the Live Nation people, and I've known them for a long time. I think they want to clean this stuff up. Mm-hmm. They want to take out the middleman, the scalper. They want to simplify the fees because they know the feedback is terrible from their customers. Mm-hmm. But this is still a thing, isn't it? I mean,
yeah, no, right. Well, first of all, antitrust cases tend to be backward looking. So what they may be taking efforts today, but we're looking at what they've been doing since 2018, essentially.
Yep.
The other thing is, they do say that, and they have said that to the Department of Justice and to Congress as well. But if you look at what's been alleged in this lawsuit, there are an awful lot of statements and documents cited when there are internal business communications going on that suggest that they've kind of turned a blind eye to the broker activity because they profit from the resale market of those tickets as well.
How do they do that? I mean,
well, because they sell the primary ticket and take fees, and then the brokers buy in bulk, and then they resell it on Ticketmaster's resale arm. Ticketmaster charges just to list it, and then they take another fee when the ticket's actually sold. So they're basically double dipping on the same ticket.
How is this different? I know, that's not good. How is this different from what ticket resellers, Vivid Seats or AXS or any of those other companies that consumers have the option of using, how they operate and how they collect fees?
So this is about whether they knowingly resell these tickets. Now, a reseller could sell a ticket that's been bought improperly by a bot, but not know it. They could implement security measures, not understand the extent to which the bots and the scalpers have been able to technically go around those security measures, and then, in an honest attempt to provide a place to resell the tickets. In this case, what the FTC is saying is that Ticketmaster knowingly did this, and they didn't step in the way. They didn't implement any of the rules that they have internally to stop it. They let it happen. So it remains to be seen whether some of the other resellers have that same kind of evidence internally. It may be that they're doing what they can to prevent the conduct, and in that case, it may not violate the BOTS Act.
How about the Department of Justice? What are they doing with this company? I mean, is there talk of breaking up Live Nation from the Ticketmaster?
The Department of Justice has been going after this company for years, ever since Live Nation acquired Ticketmaster, which, yes, Paul, I know you worked on that deal, right? And that was done with a consent order, meaning Live Nation promised to behave a certain way if they were allowed to buy the company. And essentially, it's been alleged and investigated and found twice now that they violated that. So now the Department of Justice has just sued them and said, you're engaging in all kinds of anti-competitive activity by virtue of your strong position kind of in every aspect of the live concert and live event industry. And, the only answer at this point is to force you to sell Ticketmaster, because when we impose behavioral conditions, you just ignore it.
How do you see this resolving? Is this going to be something where they battle it out to the very end and get a verdict, or are they going to try to settle?
Well, I think two different answers depending on the lawsuit. I think on the FTC lawsuit over the Bots Act probably ends in a settlement because the penalties are astronomical. Over $53,000 per violation.
There you go.
And we're talking about probably 5 million violations a year.
And counting.
And counting, right? Starting in 2018. So that probably ends in a settlement for a fraction of what ultimately could be fined. The Department of Justice suit, I suspect Live Nation will fight for many years. That goes to trial in front of a jury in March. So we're actually probably going to have a verdict in the first quarter, unless they manage to finagle a settlement, which I understand they're trying hard right now to settle with the Trump administration. But if they don't, it goes to trial in March. We'll have a jury verdict. I think it'll be hard to find a jury that's not going to be inclined to rule against Live Nation if they've ever tried to buy a ticket for an event.
Absolutely. Like, how can you find someone who's completely objective about this and has no real firsthand experience?
Exactly.
No, I look, like, as a hold stock analyst I look at the stock. It's up 26% year to date. Is that the market telling me we've got an administration in office right now that might be open to a deal? Is that kind of what it's saying, you think?
I think so. I think there are those out there that think Live Nation may be able to get some sort of a deal. We know they're making a lot of efforts to do so, and doing things the way seem to have been successful for others with this administration. And I do think that's the sentiment. And also, it's a long way away from something happening. Even if they lose this jury trial in March, then the judge has to decide on a remedy. Then they appeal. That remedy probably gets stayed pending the appeal. So we're really not looking at an impact for a couple more years.
In the meantime, you have artists trying to, limit how they sell their tickets as well, and that just creates confusion for consumers too. They'll release a slate of tickets and then hold off and then release another slate of tickets. And if you want to transfer tickets to someone, it's very difficult on the Ticketmaster app because they want to make sure that you're an actual person, not a bot. I mean, it just gets difficult for people who just want to go see a show.
Right. And that's why this is a politically popular cause. This is the one thing that leads me to think maybe the DOJ won't settle with Live Nation despite the efforts, because this is really, the Taylor Swift fiasco brought it all to the forefront more than ever.
Bruce Springsteen,
right? There have been other issues since then. And it is politically popular. We'll see what happens there.
The only way, musical folks can make money is touring.
Right.
I mean, I don't get anything.
Spotify doesn't pay you anything.
No, I mean, it's it. Right. That's why you got. I mean, I saw Eric Clapton, and the dude's 80.
Was he sitting the entire time?
No.
No, he stood?
Standing most of the time. It sounded great. I don't know, but I mean, they're selling their catalogs for hundreds of millions of dollars, and they're still touring. I mean,
merch. Tons and tons of merch.
And that's the problem with these astronomical ticket prices. That excess doesn't go back to the artist. It's just going to the middleman or going to Live Nation or Ticketmaster, whoever the reseller is.
Our thanks to Jennifer Reed, Bloomberg Intelligence Senior Litigation Analyst. We move next to news from the memory chip maker Micron. This week, shares of the company fell after its forecast for the first quarter failed to impress investors. And this comes despite revenue and profit expectations being higher than estimated. In the backdrop, Micron stock has nearly doubled this year, rising at a faster pace than most of its chip peers, reflecting AI-fueled optimism. For more, co-host Scarlet Fu and I were joined by Jake Silverman, Bloomberg Intelligence Semiconductor Analyst. We first asked Jake why investors were disappointed with Micron.
I think it has a lot to do with just very high expectations coming into the quarter. But overall, look, I mean, the fundamentals of the business remain very strong. I think the commentary on the call from management was very positive. And so I think we're going to continue to see an upcycle in memory, at least for the near term.
So what is the call here? What's the street looking for this name? Again, the stock's just, as you mentioned, ripped this year, up 94% year to date. What's the call here?
Yeah, no, I mean, I think investors are really looking at high bandwidth memory. They're looking at AI. They're looking at data center related revenue. In the last fiscal year, data center related revenue was 56% of sales. So as demand continues for that, we also have to keep in mind that there's traditional products as well that are an important part of the business. That includes smartphones and PCs. Investors really want to see continued pricing strength. And as demand continues to grow for high bandwidth memory, which is very important for AI, and as capacity for that shifts over to high bandwidth memory, it further constrains the supply because it has lower yields, it has larger die sizes. So there's only so much capacity in the industry, and it's shifting over in favor of AI, and that's just constraining supply for traditional products, which, given the supply and demand, the importance of supply and demand balance in the industry, it would suggest that as long as demand for AI continues to grow, we'll see further pricing increases.
So that's a lot of conditions. I mean, you talk about memory chips, which Micron is the biggest U.S. maker of. We know that this business is kind of famous, or infamous really, for lurching between booms and busts, and that results in these price swings to compensate for the previous, plethora of chips or dearth of chips. How does the AI revolution change this dynamic?
Yeah, no, and as I said before, really, I want to put emphasis on the fact that high bandwidth memory demand constrains supply for other products, specifically with DRAM. But DRAM now accounts for about 80% of sales for the company. So it's vastly more important than what we're seeing in NAND. But the other 20% of sales in NAND, we're also seeing strength for enterprise solid-state drives, which are also important for AI. So, yeah, look, I mean, I think historically we've seen up cycles tend to last somewhere between 7 to 10 quarters. But we're now extending beyond that. I mean, we're looking at, based on the guidance, at least 12 quarters, and then based on the potential for further increases in pricing, it could extend all the way through the next fiscal year at a minimum. So, yeah, I mean, really, it's just kind of an almost unprecedented situation, or at least not something that we've seen in a very long time. And it really just comes from structural tailwinds from AI, both on demand, which is improving pricing via different products like high bandwidth memory, but also just because, like I said before, it's just constraining overall supply. And that's not just unique to Micron. That's true for both SK Hynix and Samsung as well. And the three of them account for the vast majority of DRAM demand in the industry, and then in NAND as well.
Yeah, Jake, that's kind of where I wanted to go. The competitive landscape here, it feels like there's, again, you mentioned kind of three names there. Is that really kind of what's driving are those three companies driving this business?
Yeah. So SK Hynix has really had the lead in high bandwidth memory. Micron has become sort of a very fast follower, and now there's reports that Samsung will be supplying into NVIDIA's Blackwell Ultra platform, which might pave the way into Rubin for them as well. So, I mean, I think this three-company dynamic that we'd seen for a very long time, obviously you've had some Chinese competitors come on, but this three-company dynamic that we saw in traditional DRAM seems to be now shaping up again for high-bandwidth memory. So I think those past dynamics that we've seen are going to be the dynamics going forward again.
Our thanks to Jake Silverman, Bloomberg Intelligence Semiconductor Analyst. Coming up, a look at how U.S. drug maker Pfizer is trying to carve its share of the obesity drug market. You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney, and this is Bloomberg.
This is Bloomberg Intelligence with Scarlet Fu and Paul Sweeney on Bloomberg Radio.
We move now to the news in the pharmaceutical space. This week, the U.S. drug maker Pfizer said it will pay $4.9 billion for the obesity startup Metsera. It's a bid to catch up to rival drug makers after failing to compete with its own weight loss medications. For more, co-host Scarlet Fu and I were joined by Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals Analyst. We first asked Sam to give us some context on why this deal is important.
Obesity is one of the key causes of a whole variety of diseases: cardiovascular, cancer, mental health. So if we can treat it, if we can prevent it, if we can reduce it, it's brilliant for the entirety of society. Here, there is a deal where Pfizer thinks they've got something that's going to be able to give them a chance at playing in this very important area and very massive market, right? So the drugs are interesting. They're relatively early stage. We're looking to see, with some new data coming up, whether some of the promise that we've seen earlier for these drugs that the company has, which the latest stage one is still in phase 2. They need to start the phase 3 in 2026, whether they are as competitive as they looked in the earlier trials. There were some questions on efficacy, less so than side effect profiles. So we'll have to wait and see how that pans out.
Sam, could you get into the science a little bit and maybe, keep it basic for folks like Paul and me? Because Metsera is described as the next generation hopeful in obesity. They use these long-acting analogs versus GLP-1. And I'm wondering, for people who might be holding out for Metsera's treatment, what that means versus the currently available Zepbound or Wegovy.
Yeah. So the latest stage drug is very similar to Wegovy and similar to tirzepatide or Zepbound. The amylin drug is a little bit earlier stage. There are companies with more advanced drugs in that world, but they all kind of feed into the same pathway, which is the pathway that talks between your food intake and your satiety centers in your brain and your insulin centers in your pancreas. It tries to balance, I've eaten enough, let's stop eating now, and let's release some insulin, make it more sensitive so that we can deal with the onslaught of sugar that comes into our blood. That's where they are. It's that central to that space. There's cells in the gut that release glucagon-like GLP-1s, glucagon-like peptides, the cells in other parts of the body who are responding to it. So that's where these things sit. And amylin is just one of those agents in the middle of it.
Sam, just kind of stepping back on these GLP-1 drugs in general, there's a certain level of efficacy today. There's a certain level of, let's say, side effects, whether it's nausea or something else today. Is there room for improvement on both efficacy and side effects going forward with these drugs?
Yeah, I mean, with it's the balance that's the most important. With efficacy, I think we're pretty much there. I mean, there are folks that we know that go on a drug for a week or two and they lose 4 or 5 kilograms. That's fine. You don't want to lose much faster than that because I don't think it's particularly healthy if you lose weight at a much higher speed. And also, you don't want to get much lighter than a 80 kilo or 90 kilo or 75 kilograms, depending on your size. So the key is, how do you get there? If you get there by having lots of side effects, then your probability of staying on the drug is lower. But we want you to stay on the drug. So it's a very, very tight balance. And then, of course, you have to figure out, well, am I happy taking a weekly injection, which I think a lot of people don't have a problem with it. But what if Metsera is right and push it to once monthly? What if some of the other competitors coming along with once every 3 months? Now, those are things that we have to wait and see how the data shows in terms of that balance I've just referred to.
Our thanks to Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals Analyst. Staying in the pharmaceutical space, this week the Trump administration linked Tylenol to autism and urged pregnant women to avoid the common pain medication. And this comes despite the lack of widely accepted scientific evidence supporting the risk. For more, co-host Scarlet, Phil, and I were joined by Ann Hunter, Bloomberg Intelligence Senior Equity Analyst for Biopharmaceuticals. We first asked Ann about the science behind the latest news.
There are a lot of studies on it. It's certainly driven by an increase in finding a solution for the increased rates of ADHD and autism. I think it's really important here to qualify or quantify what we're talking about with frequent Tylenol use. And most of the studies are looking at measured as more than 28 days over the course of your pregnancy. So that is a lot of Tylenol use. We're not talking about you have a high fever and you take it for a day or two. This is kind of more long-term use. There is a correlation between Tylenol use and these disorders in children. And I'll probably lose listeners if I go too deeply, but correlation is not causation. Those are two separate things. And while there's a lot of literature out there, a lot of clinical studies, I would argue that the best ones look at sibling analysis. So they compare a mother who had frequent use during one pregnancy and not the next. And that's the best way to kind of look at this. And in those studies, there was no findings of increased risks. And there have been several. There was a $2.5 million children study in Sweden, as well as a more recent one out of Japan. Unfortunately, randomized trials are difficult to do. There's just too many variables. But the sibling analysis is probably the best we have.
So, Anne, when I think about the companies that are affected, certainly Kenvue, which owns the Tylenol brand, Tylenol's generic name is acetaminophen, and there are many other companies that make acetaminophen as well. Are we seeing them impacted in any way?
This is, even for Kenvue, this is maybe a high single-digit portion of sales, and that's Tylenol overall. So you assume that the pregnant population is a much smaller percentage of those sales. And I'd argue even, before all of this, a lot of physicians, certainly mine, when I was pregnant, recommended only taking Tylenol when you have one of those, high fevers. So I wouldn't expect it to truly be a material impact to any of these companies.
Is there anything else out there that is at risk here? I mean, from just the FDA, your coverage here, because I know there's a lot of uncertainty about which drugs are, kind of favored by this administration and which ones aren't? Are you seeing that in your coverage of your companies?
Well, for pregnancy in particular, I'd say there are no favored drugs. You certainly were never suggested to take aspirin, and Tylenol was one of the few things that was considered okay. Mm-hmm. But overall, anytime you get a lot of media attention on any drug from politics or anything else, it's typically not a great thing for the companies, but I think it does tend to even out as it passes.
You are our senior equity analyst for Biopharmaceuticals. When the Secretary of Health, Robert F. Kennedy Jr., speaks, does he tend to move companies in your universe?
I would argue yes. For better or for worse, I'd say they definitely move, but I would say that they go back to a steady state.
Okay, so it's like an immediate knee-jerk reaction and then things calm down.
Exactly.
Our thanks to Ann Hunter, Bloomberg Intelligence Senior Equity Analyst for Biopharmaceuticals. We move next to some news in the luxury space. This week, we heard that the Finnish company Oura Health is raising $875 million in a new Series E financing round, and it's now closing in on a roughly $11 billion valuation. That's after selling about 3 million rings over the past year. For more, co-host Scarlet Fu and I were joined by Mark Gurman, Bloomberg News Managing Editor for Global Consumer Tech. We first asked Mark for more background on the Oura ring maker.
They want to scale production. They want to scale R&D. They want to move into new regions. They want to get into new retail stores. They want to add new software features. So they're looking to grow quickly. This nearly $11 billion valuation, this is a pretty specific hardware company. They really make one thing. And if you look at their market cap now, after that raise, you compare it to other companies that are known for really one type of hardware product, Peloton, iRobot, Sonos, Bose. Oura is now worth more than all of them combined, which is pretty crazy to think about. So far, this looks to be a success story. It's not a very old company, but it's a company doing effective things, and they're clearly building a product that people like. They've sold 3 million units in the last 14, 15 months or so. They've sold 5.5 million rings to date. They're due to cross 1 billion in revenue in 25, 1.5 billion in 26. They did 500 million in 24. So they seem to be growing quite nicely.
I don't know, not being into the fit ring business myself.
Fit ring, I like that.
Fit ring. I mean, this seems like something that your friends at Cupertino could come out with tomorrow and copycat. How do you think about the competitive landscape?
Yeah, the competitive landscape is interesting. There's a few smaller players that are also doing smart rings. Samsung rolled out what they call the Galaxy Ring last year. And for Samsung, it's actually been a dud. The functionality is just not on par with Oura. What Oura has is a very strong brand. They have very strong functionality, and they have that big first mover advantage. But you're right. If Apple comes out with a ring, they're going to eat Oura's lunch. Aura's perspective is that they have this gigantic and tried and true in legal proceedings patent portfolio. And so they feel that if Apple were to come out with a ring, or another company were to really hit the nail on the head with a ring, that they would be able to defend their patents. And they've shown to be able to do that. They have some cases in front of the International Trade Commission and other organizations right now for some of the other competitors. So we'll see what happens. I don't anticipate Apple coming out with a ring anytime soon. I will say that this $10 billion valuation is a little bit of a double-edged sword. On one hand, that's amazing for the company. On the other hand, it puts them in territory where they're probably not going to be acquired or bought, and which would spur another company like Apple, if they wanted a ring, to develop one versus buy them. And definitely they're going to have to make a decision in the next couple of years whether they're going to go public via an IPO, via a SPAC, or if they're going to stay private.
Our thanks to Mark Gurman, Bloomberg News Managing Editor for Global Consumer Tech. Coming up, a look into the current succession plan at T-Mobile. You're listening to Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. You can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney, and this is Bloomberg.
This is Bloomberg Intelligence with Scarlet Fu and Paul Sweeney on Bloomberg Radio.
We next move to some news in the telecommunications space. This week, we heard that T-Mobile is promoting Chief Operating Officer Sweeney Gopalan to the top job. He will replace CEO Mike Sievert, who will become vice chairman. And this comes as T-Mobile competes for customers in a market that now also spans home internet and satellite service. For more, co-host Scarlet Fu and I were joined by John Butler, Bloomberg Intelligence Senior Telecom Analyst. We first asked John if he's surprised with T-Mobile's changeover.
Not at all. This was incredibly well broadcast. Sweeney has been hitting the conference circuit. So at this time of year, all the major investment banks hold these conferences. And he's been at almost every one, sort of out there telling the T-Mobile story. And in my mind, it answers one of two questions, right? With any incoming CEO, you're like, can they manage the company effectively? And can they manage the stock effectively? Can they get that narrative out, spin a good story? And he is really good at that. So he's answered the second question. And I think in some ways he's answered the first as well.
Talk to us about the wireless business these days. It's just a brutally competitive business. Just give us the lay of the land there between AT&T, Verizon, T-Mobile, and I don't know, anybody else who might be out there.
I mean, the big three are still dominant, Paul, and T-Mobile has executed beautifully over the past few years. You know, they've done a very good job of sort of securing the lead in terms of subscriber growth by, you know, marketing on this hip counterculture brand image. They continue to be, I think, having an outsized impact on consumers. When you think of wireless, it really is a consumer retail business. They all have thousands of stores. They advertise on the Super Bowl. They have giveaways. And I think T-Mobile, more than most, really does that well. And I think the big three, because of their scale, it sort of sets this sort of wide moat for any newcomers that want to come in. So T-Mobile as number two in the industry, I think, is going to remain firmly in that place, if not move into the number one position over the next several years.
Who's number one, Verizon?
Number one is Verizon still. So
I'm a Verizon person.
I am too, by the way.
You just went to Italy.
Yes.
And what did you do for your phone needs?
Fine. It's just I have a plan that just ports over to an international.
Okay, because
all of my offspring. That's the only thing that I still pay for.
They're on
Me
the payroll
too,
in that
by the
regard.
way.
Yes.
No one wants to give that up. Why pay for your own cell phone service when Dad will pay for it?
Yes.
I switched over to T-Mobile because of the
did?
giveaways. Yes,
Wow.
because of the free iPhone last cycle, and also because you get free data and free international texting when you're overseas up to 5 gigabytes. So that means I never have to buy an international day
Comparison
pass.
shopping.
That is
Very
the
cool.
single biggest hook I hear. So when
Really?
people come to me and they're like, I'm a T-Mobile subscriber, they have all these giveaways, and they have international calling.
That makes a big difference because
It
when I was
does.
on
It
AT&T, I
does.
was paying $10 a day,
Yeah.
and that adds up really quickly.
It does. It really
You know,
does.
and then only one person in the family can get it because, you know, not everyone's going to get it.
Right.
And you have 4 offspring, plus an ex-wife you're still paying for.
Well, there you go, Paul.
Charlie Pellet is on the T-Mobile. He always tries to sell me to go
Charlie
to T-Mobile.
also knows the great deals. That's
Yes.
the secret here at Bloomberg.
Right.
Charlie
and he's
knows all
always
the great
traveling to
deals.
strange parts of the world where he probably needs that kind of stuff. So what's the future of wireless in this country? Is it just ARPU growth, average revenue per user? I mean, is that kind of the story for everybody?
That is the great question. That is what's driving growth now. For a telco, you sort of run out of room for adding new subs. And so you need to drive that up, that average revenue per user. And they're doing it with the giveaways we were just talking about. They actually charge modestly for those in some cases. They're selling you phone insurance. T-Mobile is now pushing into the advertising business. But the real avenue of growth to watch for them going forward is broadband. They are making more and more inroads into that market. And T-Mobile, it's what I'm watching with the new CEO here to see what he does in fiber broadband. Because if T-Mobile has had any sort of a misfire over the past decade, it's not getting into fiber broadband in a bigger way, in the way that AT&T and Verizon both have through sizable and aggressive acquisitions. So it'll be interesting to see what he does there. My call is he's going to start building quickly and aggressively, would be my guess.
Our thanks to John Butler, Bloomberg Intelligence Senior Telecom Analyst. We move next to the media entertainment space. This week, late-night host Jimmy Kimmel returned to television. ABC parent Walt Disney had pulled the show off the air. That's after Kimmel said conservatives were trying to score political points off the fatal shooting of conservative activist Charlie Kirk. In his return, Kimmel didn't shy away from poking fun at President Donald Trump and FCC Chairman Brendan Carr and making an impassioned case for free speech. For more on all this, co-host Scarlet, Phil, and I were joined by Geetha Ranganathan, Bloomberg Intelligence Senior Media Analyst. We first asked Geetha what this news means for late-night networks and whether they still make money.
They don't make a whole lot of money, Paul, not anymore. It used to be that, late-night television would bring in a lot of ratings, would bring in a lot of ad dollars. That has really changed. We've seen linear TV kind of hemorrhage viewers now over so many years, and late night is no exception. So if you just kind of look at, Jimmy Kimmel's show, for instance, it generates roughly about $50 million in ad revenue. Compare that to a few years ago when it used to generate close to about $150 million. So definitely ad revenue going down. Wow. And most of these late night shows are losing money, just given the programming budget for these shows. So not really a needle mover in a financial sense for Disney.
Okay, but in a cultural sense, it is, because these are shows that define the networks. And so thank you for putting numbers to that, because I think there's a lot of concern or skepticism from certain corners of American communities that question whether Stephen Colbert's show should have been canceled for financial reasons, as CBS asserts it was. Geetha, is ABC going to pay some kind of price for allowing Kimmel to go back on air? Because the president, for instance, alluded to making more money off the company for doing so.
Yeah, it's certainly possible. I mean, we've seen President Trump kind of go after, the broadcast networks, threaten to kind of revoke licenses. So he goes after anybody. He uses his power, the courts, to attack anybody who says anything unflattering about him. So that's, definitely possible. From a Disney perspective, though, you have to remember this is a very, very diversified company. So yes, ABC is definitely a very important asset. But again, if we put some numbers around this, Scarlet, it makes up only about, Disney itself generates about $90 to $100 billion in revenue every year. ABC is about $5 to $6 billion in revenue. So it's just about 5% for the company. So again, small potatoes in the context of the company's financials. But yes, you bring up a very important point about culture wars. Unfortunately, I think Disney is in a losing position whichever way, because they're either going to anger, the conservatives or the other end of the spectrum. So it's just tough.
Yeah. Very quickly, Geetha, in the days following Kimmel's suspension, a number of people canceled or threatened to cancel their Disney Plus streaming services. Do we have a sense that this might get kind of noisy when it comes to the earnings reports and the streaming numbers and subscriptions?
I mean, we've seen this kind of backlash before happen, in the case of certain programming and with Netflix, with other streaming services. Typically, we haven't really seen it reflected in the numbers, even though there's a lot of noise around it. So yes, maybe a little bit of up and down, but I don't think it'll have, again, any big needle-moving effect on the Disney Plus subscriber numbers.
All right, Geetha, while we got you here, I have to ask, do we have any news on succession to Bob Iger?
Not yet. Not yet, Paul. I mean, that's the biggest question always for Disney. He is supposed to retire by the end of 2026. There is a lot of rumblings that it might be somebody internal. We keep hearing about Dana Walden. Of course, nothing certain just yet.
Our thanks to Geetha Ranganathan, Bloomberg Intelligence Senior Media Analyst. We move next to some news in the food and beverage industry. The coffee giant Starbucks announced it will close stores and eliminate 900 jobs in a $1 billion restructuring effort under new Chief Executive Officer Brian Niccol. For more, co-host Scarlet Fu and I were joined by Michael Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst. We first asked Michael for his take on this week's news.
This was very clearly communicated to the street back in April on their fiscal 2Q call. Management said that, we expect more restructuring charges. We're going to continue to evaluate our store base. Really, management wanted new CFO, Kathy Smith, to be involved in the process. So this was not a surprise.
All right, a shout out to my Starbucks on Route 35 in Wall Township, New Jersey. They do a great job, great folks, very efficient, very good. Mike, what does this company need to do? What do they say is on their to-do list to turn this company around? What are you looking for?
Yeah, it's more operations and marketing, and we're starting to see things kind of inflect here. We think fiscal 26 should be a nice bounce back year. So First it's with the operations, right? So it's eliminating menu items, increasing labor, which baristas were very happy about. Creating a smart queue for mobile orders, right? So the stores aren't as chaotic and baristas aren't serving, mobile orders for somebody 30 miles away before helping someone inside the store. And then service standards, right? They're rolling out these green apron service standards this year. It's a big investment on training and really nailing the consumer experience in the store. And then from there, it's the marketing, and marketing seems to be working. They pulled back on discounts, and what they're doing is more marketing. You'll see some TV ads, right? They're doing more digital marketing. And we think that's a smart move. It seems to be paying early dividends. Starbucks non-rewards member transactions are up. Non-discounted rewards members transactions are up. And we think these are a sign that sales are going to inflect higher in the coming months.
Okay, but this is taking a while. Paul and I were just saying that Brian Niccol owns this now. He's been CEO for a year, and they're still in turnaround mode. They're still in kind of like, let's figure out our path forward. Investors, please be patient. Are investors going to continue to be patient for another 6 months to 1 year?
I don't think they're going to be patient for 6 months to 1 year in terms of the stock price. I think Brian Niccol's job is very much safe. You can't turn around an aircraft carrier on a dime, right? This is a massive organization, 18,000 stores just here in North America, over 40,000 globally. So yes, this is taking longer than a lot anticipated, myself included. Are investors going to be happy if they don't see same-store sales inflect here in the first quarter of fiscal 26? No, they're not going to be happy, and you're going to see it reflected in the share price, right? So, I think they're making the right moves. This has been a longer turnaround than most had expected, but I think Brian Niccol's pressing all the right buttons right now.
Our thanks to Michael Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst. That's this week's edition of Bloomberg Intelligence on Bloomberg Radio, providing in-depth research and data on 2,000 companies and 130 industries. And remember, you can access Bloomberg Intelligence via BI Go on the terminal. I'm Paul Sweeney. Stay with us. Today's top stories and global business headlines are coming up right now.